Hello, this is Leke from Cosby Finance. In this video, I want to explain to you how you can trade boom and crash 1000 without being stopped out by the spikes or the crash. Alright, okay, if you're new in on this channel, I want you to subscribe to this channel and also click the bell so that you can get notified of new videos and strategies on this channel. Also, so that you can join our community where we have other traders that are doing good, and also for daily signals, you can join our Telegram group. That's where you learn a lot also. So now this is just a quick video. It's not going to be lengthy. I just want to explain this to you. The strategy that you can see here has been explained before, so I'll implore you to go check the previous videos for how to set this up for yourself. So you can milk the market with this. You can make $50 to $100 daily with this stresslessly. So it's a matter of patience and being apt, not being greedy. Trading is not a game of greed, it's a game of patience. Let the market come to you and milk the market. We trade to make money, we don't trade to make the brokers rich. We trade to make the brokers broke. As their name is, they're brokers, so they're supposed to be broke, not for you to make them rich. So like the strategy we explained earlier in the previous videos, but now on 1000 and boom 1000 and crash 1000, what you need basically is waiting for your setup to play out. The black line here signifies your 50 moving average, then the orange line is the 50 moving average, the red line and the blue are both 5 moving averages. But like I said, if you want to understand how I set this up properly, so that you don't just set it haphazardly, I ensure that you go watch the other videos and you get the proper settings and explanation of how this strategy works. So on this, now I'm on crash 1000. I can see that the market was moved above the 50 moving average. This black line moved above 50. Yes, when it moved above 50, then you see that it dropped, but it didn't drop below the 50 moving average, and it dropped to oversold. You can see your stochastic here. These are your stochastic here. You can see right here it dropped to this oversold level. Remember, we said our oversold level is between 50 and 20, or from 20 below. So once it has crossed below 50, we believe that it's oversold already. All we are waiting for is just for the cross of the stochastic. So as the stochastic crossed, you can see that the moving averages followed the same trend, and the 2-5 moving averages crossed the 15, and you see that it rode up. Now in this kind of scenario, this present scenario we are now, I want to advise you to trade this. Why? Simple. Because this trend has already moved. If you see, you can see that your stochastic is already at 80 already. So it's already in overbought already. So there's a high probability of this market dropping, because you can see that it's already close to a support, a resistance here. Yeah, at this point it's already at a resistance, so there's a high probability that it drops. So these are the signs. You can see you have your resistance here, then you have an overbought here on your stochastic. So that means anything can happen around here. So placing your trade here is not going to be wise. It's advisable that you wait, you allow this drop a little, and it falls into your oversold region before you now take your next shot. But if if the moving averages drop below 50, then this entry is no longer valid. It means there's a likelihood of a downtrend occurring. Now, moving averages are used basically to help us to take the stress out of us, and they can serve as support and resistance, and they also serve as the trend indicators. So if the moving averages drop below 50, there's the likelihood of an uptrend, of a downtrend. Take for instance, you can see from here to here, you can see that it was below the 50 moving averages, but still this market is still an uptrend market, because you can see after it dropped here, it still moved upper. You can see the market started moving all the way from here. So still, it does not mean that the market is in a downtrend, but you could still make a few bucks from this. Like you can see the market dropped here, then went this high. So if you place an entry here, you can see you'll be able to make this market down to this level. So that's it. So the first thing you need to do is, once you see that the market crossed below, what you need to do is to wait for it, let it cross backwards, let the moving average, once the moving average is cross 50, like this scenario, you don't place your entry yet, you wait. Then you wait for your 2 5 moving averages, which is the blue and the red, to cross the orange moving, which is the 15, but it will not cross the 50. Then it will not cross back down. It's at this cross here that you want to place your trade. So at this cross here, you place your entry. This tells you that it's confirmed that you're in a downtrend. Then you place a sell here. Then you place your exit here, and you make the market. So like I said, it's a game of patience. So you can try this out on your own and milk the market, make your $50 to $100 daily. If you make $50 daily for 30 days, that's $1,500 at the end of the month. Or if you make $100 daily, if you put $100 as a target daily, that's $3,000 at the end of the month. So that's something reasonable for you to do something with. So I remain your best friend, Kylie Leke here. So don't forget to join the Telegram group and also to subscribe to this channel, and also check the description below. You will see the necessary links. If you want to contact me, also you will see it down there. And also, if you want anything I should address, you could also put it in the comment section below. I'll see you in the next video. Take care.